Alright guys, thanks for tuning in. So this video is going to be sort of every week I'll try to do a weekly market outlook. Kind of what are the, plays and setups I'm looking at for the week. Um, and just kind of give my thoughts on it. I also want to just make sure that everyone understands that this is not financial advice. It's just strictly my opinion. So I just wanted to get that out of the way. So let's start with the uh, Forex calendar here. I'll try to make these videos shorter. A lot of my videos actually seem to be really long, so I try to make it shorter this time, just to get in to the nitty gritty and just sort of remove any of the unnecessary info, right? Okay, so anyways, I think consumer confidence on Tuesday is something that we definitely should look at. It's definitely sort of a sentiment indicator, right? It sort of measures how optimistic or pessimistic people feel about their personal finances and the overall economy. I think it is pretty crucial when people feel secure, they spend more money. Um, I mean, but if they don't, then that also kind of explains a lot, right? We're in a high inflation market. We have high interest rates as well. We have geopolitical issues. We have layoffs. I mean, job market is possibly, it could thin down over time and things like that. The consumer confidence is really going to give you an idea of, how the consumers are actually feeling about it, right? And with that, you can kind of get an idea of the how well the economy is actually doing as well, right? Besides just the other important economic indicators as well. But this is kind of just a cherry on top, I would say. It's like an added confluence, right? It can be used to predict future spending in some way, right? If they have high confidence, we can say, all right, they might be more willing to spend. Um, but they can also act as an early warning sign, right? It is a leading economic indicator. So before actual sales drop or unemployment spikes, consumer confidence surveys actually usually show people beginning to worry, giving businesses time to repair. And I think it can also act as a leading indicator as well. So in any case, all right, that's that. So I think that'll be interesting to take a look. Wednesday we have Australian CPI, Kiwi cash rate, which is the interest rate. We have on Thursday, we have PCE price index, which is essentially the sort of the consumer inflation minus the goods, not the goods, but minus the food and energy. And I believe this inflation is strictly tied to the consumer side, so I don't think they incorporate anything with the business or corporation side. So this is actually the preferred metric or measurement, sorry, that the Fed actually uses to kind of analyze and measure the actual inflation that are tied to the consumer. We have also GDP, preliminary GDP quarter over quarter. Friday, I believe we have BOE, government and Bailey speaking. So that will probably be talking about the usual things about the economy. He's obviously the head of central bank, so they talk a bit about the economy, kind of their central bank tones, things that they're looking to for future monetary policies, whether they might hike or, are they hawkish, are they dovish? These are important things for sure. Market usually prices these things before any of these data comes out, right? So this can be really good for as a leading indicator as well. And Canadian GDP month on month. So that will be interesting to look at, right? So quite a bit of interesting data that's actually coming out this week. So definitely keep an eye on that, all right, guys? So, all right, now I'll try to keep it short here. Usually what I like to do is I'll just go over the currency pairs, or not the currency pairs, but the actual currencies itself. But I don't think I'll be going over too much of them. We'll see if we have time, but I think the main one is definitely US dollar. We can see that US dollar is mainly the bullish one here, and Canadian and pound is actually getting a bearish reading. We'll kind of take some time to go over that a little bit as to why. Um, all right, so what we can see here is that sentiment-wise, actually on the institutional side, COT has actually took a more bearish tone on the US dollar, right? So they actually have, I believe, a little bit more shorts. Let's take a look here. Actually, I'm interested to kind of view that and see what's going on here. COT data. Oh yeah, so yeah, pretty bearish here. They actually increased their shorts. They did increase their longs as well, but obviously their shorts actually overweight here, and their net position is actually negative, which is interesting. Let's take a look at the history so far. So what we can see so far is I mean, we've kind of just been relatively choppy overall. No real direction here. We did start to pick things up a little bit from December, but ultimately it's just kind of been really choppy. So that's interesting to take a look at for sure. What I do want to say though is I do think that this bullish call is something to actually watch for potential plays because one of the biggest things right now that we're seeing is the short-term yield market actually spiking relatively strong. I mean, we can take a look here. This is the 2-year yield, and we've actually been on an uptrend for quite a bit with barely any pullbacks, to be honest with you. And that was heavily driven by the CPI results and the PPI results. Both of them actually came in hotter than expected, which we can see over here. Um, and then you can also see the 2-year yield actually clearly represents that the bond market is viewing a very hawkish view for the US dollar. So they actually think that inflation is actually going to continue for at least within the short term. Um, and it kind of makes sense, right? I mean, we have the geopolitical tension right now between the Middle East and the US. There's a clear energy shock. I mean, it's already been sort of, I wouldn't say for the most part, it's been priced in most of these economies. And it's just the beginning, right? Every central bank that I've been hearing, including the Fed, we don't know how far this can go, right? And if we look, even though, yes, as you can see, oil is weak today and as was weak as well last week. But if you take a look, it's still extremely elevated. I mean, from the time the war started, we're still up 35%, right? And if we stay at these levels long enough, um, the worst part is that even if the war ends, the inflation is actually still going to be carried forward because a lot of these orders that are coming through, um, it takes time. It's not something that just, you don't just buy it when you feel like it, right? You don't buy oil when you just feel like it. When it comes to a business standpoint, they have to buy, loads of it. And so a lot of these things are pre-planned and they have to buy in bulk. And so a lot of these contracts are locked in for, months or years, right? So that means even if the war ends, I mean, inflation is still going to be there regardless until it dies down, right? So I think that's the worry that a lot of people have now, and it makes complete sense. And we can clearly see that in our inflation data that, yeah, it is actually starting to affect the US dollar, especially the PPI side. Job markets wise, we're actually quite bullish here. But yeah, ultimately, definitely bullish here on the dollar. Let's look at the Australian dollar. I believe there's nothing really going on for the Australian dollar. Yeah, I generally don't really see much personally on the Australian side. I think for the most part, we've been getting a little bit more of a dovish repricing, partly because, well, for starters, we've been getting a little bit of a softer inflation reading. I mean, we're still elevated, don't get me wrong, but it doesn't seem to be too strong. At the same time, unemployment rate actually did increase. I think this is one of the big ones that actually did reprice the hawkish stance that the RBA initially had. Um, so yeah, something to take note. I believe they are expecting a 4.4% based on market consensus for this week's CPI report. So we'll see if that actually beats forecast or not. But regardless, yeah, we are seeing definitely a little bit more on the softer side, on the inflation side, job market as well. Um, but overall, yeah, neutral reading on the economic side. So nothing really, there's not much growth here. Nothing to really shout of any direction. So all in all, relatively neutral. Um, so that's for the Australian dollar side. We got Euro. We got CAD as well. Let's go to CAD. So CAD has a pretty bearish reading here. What we can see is that we have been getting actually a weak COT report, a more bearish tone on the CAD. Economic growth wise is neutral, inflation is neutral, bearish for the job market. Um, and nothing really much for the CAD as well. That is CAD. Let's just shrink. All right, so the Swiss franc is pretty neutral for me. Um, I don't think I'll be looking at any trades. I mean, for the longest time, ADCHF was a really great play for longs. But now what we're seeing is that I think Swiss franc actually caught a little bit because oil started to weaken. The dollar also started to weaken. So we did have a little bit of strength coming from the Swiss franc. So a lot of it is going to be largely driven by the risk index, right? Risk sentiment. So it just really depends on what happens. I mean, it depends on whether the ceasefire is going to happen or is there any progress there. So far, I don't think there's any real confirmation of that. So even though I think most, if not, the market is, I mean, personally, what I see is that they're quite optimistic, but still, it's not really a strong sell in any way. I mean, um, so I think ultimately there is some optimism for sure. I mean, we're seeing the stock market start to move as well. I believe NQ is doing pretty well here. Let me take a look at NQ. Yeah, we're starting to actually we actually broke out the new highs here, the NQ. So I think ultimately right now we're definitely more towards a risk on kind of environment. So I don't see Swiss franc as really any need until we get some terrible news, maybe war breaks out or something, which I hope not. But ultimately, yeah, very, very neutral reading on the Swiss franc. Um, Weak overall fiscal. I mean, their interest rate is at 0%, so there's no yield there. But overall, this is really great for as a defensive currency, right? Because overall, their currency is a very strong currency. They obviously have a high currency exchange rate compared to most of these other currencies. They have a stable economy overall, so they're not really affected like the rest of these other currencies because of the inflation side, because of their currency rate. And I think the S&P is actually looking to intervene by weakening the Swiss franc if it gets too strong, right? So that it doesn't affect any sort of um, what you say, exports that are coming to the end, right? So, oh, sorry, excuse me, so sorry about that. I think it's the reverse actually. So, but yeah, in any case, that's the Swiss franc. Um, let's take a look at euro. Okay, so euro relatively neutral as well. I mean, we've been getting a weaker PMI, following elevated prices. I mean, manufacturing PMI is still below 50. One thing to take note though is that the ECB is actually pressured to still have a hike in June. So I think that's already priced in. So very limited upside because of, I mean, it's already priced in at this point. So ultimately, yeah, nothing really much from me here as well. Inflation-wise bullish, but the rest of the things are bearish to neutral. So I don't see any reason to play here. I mean, maybe as a USD process for shorts, I think this would be good. Now, GBP pound, one of the main currencies that I'm looking at for shorts. I'm actually in the current position right now, which get into in a little bit. But yeah, I mean, these are very, very strong indicators, right? We have very COT activity, we have bearish economic growth, neutral inflation, bearish job market, very, very high score, -7 here. Let's see, I think yuan is, I have to get it. Yes, that's the last pair, or the last currency, excuse me. Okay, yeah, overall, I mean, I'm not really looking to trade the yen actually, to be honest with you. Besides all the economic indicators here, something to take note is that the intervention risk is still there. If you take a look at the USDJPY, we're actually approaching um, 160 soon. So I would be a little bit more cautious here, to be honest with you. Even though after the intervention, likely we're still going to see some upside, but I would wait for the intervention to happen first and then go in for the long. Okay, so I would not trade yen at all, any of these yen pairs at this moment. So okay, let's go to the top setups. All right, we're already at almost 40 minutes here, so I'll try to rush as much as I can here, guys. Um, But let me know if you guys like these kind of quick videos. If you want me to do a longer one where I can discuss a little bit more, just let me know. I'll be happy to make that kind of video. But I understand that, I think for the most of us, we would like to just have a quick video, just look at what we need to look at, what we need to kind of keep an eye on. And I think that's most important, right, for the most of us. So, all right. So Nikkei is a very, very important play for me here. I'm actually very, very confident in this play. Um, Depending on, I don't know if we have any yen. I don't think we have any yen news this week. Well, we do have some, but nothing important, so it's fine. But in any case, yeah. So we have overall neutral reading on the institution side. Actually, for the latest COT report, it's actually bearish. But we have actually getting some really, really good bullish economic growth. Inflation is pretty neutral. I think overall they don't really have a very strong domestic like policy or fiscal policy. So I mean, it's still a very relatively low yield currency, right? Regardless, I mean, when we compare it to other currencies. So there's really no edge here for any yen strength. So I think there's a lot more bullish strength here for the Nikkei to actually rise. Job market's a little bit bearish, but yeah, still other data needs to come in over time. But what we can see, we take a look at the Nikkei here. So this chart right here, look at that. I mean, it's very very strong, right? It had a really nice push buy here that I did not get into. Kind of wish I did, but it's all good. Very very nice push. So I'm actually looking for a pullback down to this area, and we'll see if we can get it. It might tap into this area of resistance, but I wouldn't call this a very high probability setup. This kind of volatility parabolic move. I would feel that it makes more sense for some at least a 50% retracement. Definitely. I mean, this was just nothing but advice. We take a look at the daily chart. I mean, it's literally one, two, three, four updays with barely any pullbacks. So I think 50% retracement is, I would say, reasonable. I would say it's logical. So, anyways, that's the Nikkei. Okay, so GBP USD definitely something that I'm definitely looking out for a short as well. Let me take a chart here. So yeah, overall, I mean, you can just take a screenshot here. I won't explain too much. I think it's kind of self-explanatory here. How I do my analysis and what all these things mean. If you guys want me to do a fundamental course as well, I'd be happy to provide that soon. I can make a course for free, and I'll just post it on YouTube. But yeah, inflation is weak, job market's weak, economic growth, bullish. So overall, yeah, it's still pretty bearish on the economic side. Um, Definitely what I'm looking for is a push to the okay. So we already done the 50% retracement. It looks like the pound is getting a bit of strength here. Looking at my current trend Swiss franc on pound Swiss franc doesn't look that good now. But yeah, it does look like there's a little bit of strength coming in, which is fine. So I think likely I'll probably try to take a short at this area, the 61.8%. Overall, I do like the chart, but the only thing that I don't like is the daily. It's pretty bullish here, not gonna lie. So that's the only thing. But you gotta understand that the pound is. Oh, I don't think yeah, I'm not sure if I discussed about the pound. Apologies, guys. I may have not discussed about the pound, I think. Oh, I did. Okay, sorry. There's also another thing that we have to take note. So there's a lot of political instability right now, and that's probably one of the worst things for any currency you have. I mean, there's so much uncertainty, so there's going to be a lot less traders that are trying to bet or long this kind of currency. So there might not be much activity, to be honest with you. But what I can tell you is that yeah, I think this is going to be a potential good short here, definitely, right? With USD yields going up and the pound being weak from political instability. At the same time, overall softer economic readings. I just don't see this as a bullish long to me. So I'm just going to wait for the right entry and probably get it. So yeah, GPP NZD as well. I think is a pretty good one. Same idea. Just waiting for an entry. I mean, it does seem like this was the better entry, but seems like we might actually take out this high here. So we'll see. I mean, still a potential entry here. Overall, the 4H is not the cleanest. It is, I guess you can say trending down, but not the cleanest, right? The daily is kind of neutral. For the most part, it's actually been bullish for the longest time. And now we've just kind of been consolidating around this area. So, yeah, I mean, to be honest with you, not the nicest chart in GBP so I wouldn't say this is like my top play, but yeah. Um, so CAT CHF, I mean, I already took this trade. I mean, I wouldn't mind taking a pullback into it, maybe. I think any pullback into this would be great, but I've already profited in this trade. Really great setup. Um, you can look at the fundamentals with me. All right, we're approaching 20 minutes now. All right, so I'll try to cut it short soon. But yeah, okay, so job market was relatively weak, right? We can see that unemployment was actually bearish. Inflation data comparison wise, we can see PPI was actually bearish here. Sentiment as well, institutional activity. Yeah, so overall, very, very high bearish reading on the edge finder here. So this was a pretty good trade, not gonna lie. I didn't really like the 4H to be honest with you, even though it stays bearish on my exponential moving average indicator. But if you actually take a look, it's kind of choppy, right? So regardless, what really got me interested was actually the daily chart. I really, really like the daily chart. Very, very nice daily chart. I mean, this is exactly what I want to look at when I'm trying to, trade trends on the short side. And I was kind of looking at the fact that, okay, we did tap into this 200 EMA and nice pull. So I'm just seeing if we can react to the 50 and the 100 and kind of sell off. So I honestly feel it would be a really good entry for future trades, right? So right now, what we can see is that we actually took out this low, right? Let me just take this out for you guys. Hold on a second. Let me just take this out. Yeah. Okay. So I think that this would be a really, really good potential re-entry once we can see price come back to our level here. But we must take note that Friday Canadian GDP is going to come out. So if that comes in hotter than expected, then likely the Canadian strength might not be a good short. It might instigate growth, which also leads to high inflation. And then CAD is also tied into US oil, which is also highly inflationary. And so that can cause a lot more issues on the Canadian side as well for the inflation side. So that can actually make a more hawkish stance on the Bank of Canada. So that's something to take note as well. But ultimately, if we do get a soft reading, I think any sort of retracement is really, really good to short. I would like to at least get a 50% retracement on this trade, at least a 50%. And the last trade here, which I don't think is doing extremely well right now, I've been holding this shopping around here since Friday. But yeah, I mean, it's unfortunate, but it is what it is. So yeah, it's just not doing anything. If anything, it's getting a little bit strong here. Take a look at the currency strength. Maybe there's a reason for it. Let's take a look here. Give me a second. Let's see what's going on in the currency strength today. So this is more of an intraday currency strength. So I like just to see kind of what's going on. Yeah, we can kind of see Swiss franc is actually getting weaker and the pound is actually strengthening here, right? So the pound is the green one, Swiss franc is the brown one here. So yeah, they're kind of converging in together. Not really what I want on this, so might have to. I'm not saying that I wouldn't take a retry on this, but for now, I may look to probably cut it. We'll see. But ultimately, yeah, I mean, very, very strong bearish score on the edge finder. I think it's a minus 10 here. Um, like I said, I think fundamentally there's a lot of more bearishness definitely. Even though yes, the pound obviously has a higher interest rate than Swiss franc, but with the political instability that they have right now and the overall softer economic readings, I just don't see this as a strong buy because it's not just about interest rates all the time. You have to also look at the macro context. It's very, very important to have an understanding of these things as well. So yeah, I mean, for now, unfortunately, may look like I might have to get out of the trade. I might either get it out break even. We'll see. Yeah, I'm not really a fan of this kind of move, to be honest with you. But we'll see. I might even just be open to taking the cut here. I don't really mind, just to kind of wait it out. But yep. Okay, so that's about it, guys. All right, thanks for watching. I'll try to make more videos soon. More information and content, trying to provide more value. Keep uh, updated as well. Try to put your notifications on if you can, because I'm actually considering creating a Discord group. It's actually in the making as we speak. So probably in July, I will probably push it out. It's completely free, guys. It's just a place for traders to communicate. I'm planning to do some webinars, share some free content, any sort of information that I can get. I want to share it absolutely for free. Of course, at the same time, you guys can contact me directly on Discord, ask me anything trading related, any questions you might have. Yeah, I'll be happy to answer it as well. So that's kind of what I'm trying to build here. just trying to build an informational place to provide real trading information to people. None of these I'm not gonna say the names, but yeah, real information, real smart money, real flows, how to think like an actual professional trader. Yeah, so keep an eye for that, and yeah, take care, guys.